Hey everyone, and welcome to the Simple Path to Wealth book study. My name is Rob Field. I'm the creator of the book study Questions, and I am joined by author J.L. Collins, who wrote The Simple Path to Wealth. Mr. Collins, how are you doing today?
I'm doing great, Rob. Thank you so much for the invitation. Please call me JL.
Okay, so J.L. has created this wonderful book that was never intended to make its way into schools. JL, can you tell us a little bit about this book and why you wrote it?
So I wrote this book basically because I couldn't get my daughter to listen to me. And that's on me. I started way too early pushing this idea of investing in financial independence. Like any parent, I wanted the best for my child, and money is incredibly important. But in my enthusiasm for it, I kind of turned her off. And I decided I better get this down on paper. So when the time came that she was ready to hear it, if I wasn't around, it would still be there for her. And that is what led me to create the blog. And then out of the blog grew The Simple Path to Wealth, the book. And of course, now my daughter's on the path, and she likes to tell me, you know, Dad, if I'd listened to you, there would be no book, there wouldn't be no blog. So,
Okay, so what age were you imagining your daughter was going to be when she actually did settle down to read this? Like, is this something that is applicable to your everyday high school student?
yeah, I think absolutely. I don't think my daughter was ready for it in high school. And again, that's my fault. She was certainly ready for it from an intellectual point of view, but I had, again, kind of turned her off to it. But yes, there's nothing in this book that is beyond the grasp of a high school student. And in fact, I've heard from many high school students who've read it and enjoyed it. And one of the keys to succeeding in investing is the earlier you start, the more powerful it is, because compounding is a long-term game. And so if a high school student picks it up and starts reading it, maybe even starts investing with their after school earnings from whatever job they have, that's an incredibly powerful step.
Yeah, and I'm sure you're getting this in your personal finance class or wherever this book study is coming from, but time is going to be one of your best friends. And the earlier you can start, the easier your path to wealth and financial independence is eventually going to be. So simple is in the title of the book. Is it really that simple though?
You know, it really is. One of the things that my daughter taught me, she came home from college one day and I started and immediately on lecturing about this stuff. And she stopped me and she said, Dad, I get it. I know this stuff is important. I just don't want to think about it all the time. And that was an epiphany for me. It made me realize that people like me who like thinking about this stuff all the time, we're the odd ones out. Most people, and probably most of the students listening to this, are going to have better things to do with their time in their life. My daughter certainly does. She's not a finance nerd. The good news is that you don't have to be a finance nerd. You just need to learn a couple of very basic, simple principles and invest in a couple of very basic, simple things and hold for the long term, and you're done. You can literally forget about it. And in fact, that's actually a superpower. The fact that my daughter, and maybe some of the students listening to this, are not interested in this subject is a superpower in the sense that she and they will not be tempted to dance in and out of their investments, which Warren Buffett has said, that's the way you lose money. You try to dance in and out of the market. You try to time the market. People who are really engaged in this stuff and like it are always subject to that temptation. My daughter puts money from her paycheck into her investments every month. She does it automatically. She doesn't think about it otherwise. So she's never tempted to make that mistake. That's a superpower.
Yeah, I think just I really want to clarify that you don't have to be really interested in investing or buying different stocks or managing your money even to get something out of this book. This book is going to show you just these are the steps you can put in place to set yourself up for a system that will carry you all the way to financial independence or lots of wealth in the future. And that's what you really should be trying to get out of this book, is just figuring out what is that system for getting on this simple path to wealth? What steps do I need to put in place? They shouldn't be very complicated. And this book will walk you through each of those along the way. So is there anything we need to know in terms of prior knowledge? So like, what should we know about money before we start reading this book? Is there anything that would go over our heads if we didn't know it already?
That's a little hard for me to say because it's hard for me to go back to the time when I didn't know this stuff and remember what I didn't know. Occasionally, I get people read the book who say that there are parts of it that are over their head, but for the most part, the kind of response I get are, finally, this is a book about investing and finance I can understand that makes sense. And that was my goal. I'm not writing this for people who love this stuff and live and breathe it, although a lot of those kinds of people do read it and enjoy it. Again, I'm writing it for people like my daughter who are smart and they know it's important and they want to get it right and they want to spend as little time as possible on that subject to get it right. So I don't think it would be a problem.
No, and working with a lot of high school students myself, so I'm a high school personal finance teacher. I know that the majority of you are going to be at a level where this should just read perfectly fine for you. It'll make sense as it goes through. There are a couple of things I do want you to help me define, though. What is the market? Because you just made reference to the market. What is the market?
So that's actually a great question, and that's one of those basics that I don't even think about. That if you don't know it, you don't know it. So the market is a very broad term. It can include virtually all investments of any kind. When I'm using it, I tend to I'm most likely referring to the stock market. And the stock market are those companies that are publicly traded, which means that individuals and institutions can buy shares in those companies. That's as to contrast with companies that are privately owned. So there might be a coffee shop in your neighborhood that is privately owned by someone. You can't buy into that unless you make a deal with that specific owner. On the other hand, if there's a Starbucks in your neighborhood, and there probably is, well, that's a publicly traded company. You could, if you wanted to, buy shares in Starbucks. There's also a market in bonds, which is another subject. There's a market in REITs, which is real estate investment trusts. So there are all kinds of different markets, but markets in general are areas of potential investment for you. And when you hear me talk about market, I'm probably talking about stock market.
Yeah, because I mean, like you said, there are a ton of markets out there, markets where you can just buy or sell any, we'll call them assets, something that you would want to trade with someone else. So you're exchanging your money in exchange for something else. So we do have stocks, bonds, but some of the ones you may have heard of as well are things like cryptocurrency. There are markets for buying and selling cryptocurrency, NFTs, collectible items. Like there are tons of different markets out there. But in the simple path to wealth, we are going to really be focusing on the stock and bond market.
Absolutely.
So,
Farmers markets is an example, which
farmers
is
markets, yes.
a market that's very, very simple, very different, but it's a market where people come together to buy and sell.
Yes, perfect example. All right, let's go simpler again. What's a stock?
A great question. So a stock is a piece of ownership of a company, basically. And this is an important distinction. A lot of people think that when you are buying stock, you're simply buying, well, in the old days, it used to be little bits of paper. Now it's bits on a computer. You're just buying bits on a computer that might go up and they might go down. And you're hoping, obvious, that they go up. But on a more fundamental level, when you buy a stock, you are buying a piece of that company. It's probably going to be a very small piece of that company. But if you buy stock in Starbucks, as we mentioned earlier as an example, you now own a piece of Starbucks. And if Starbucks does well and prospers, then you will do well and prosper with the stock over time. If Starbucks doesn't do well and prosper, then your investment in it, your stock will tend to decline. Now, there's a lot of speculation with stocks. So there's the fundamental part that is the actual business that you own. And then there's a bunch of foam on top of that. That's the speculation is traders are trying to make a little bit of money one way or the other, betting on where it's going to go short term. The kind of investing we talk about, we don't worry about traders. We're investing very much for the long term.
Okay, so you made reference to the foam, and I want to go back to that again because you do talk about the foam in your book. What are we talking about when you're referencing the foam?
Well, so think of it this way. Imagine that you had a mug of beer And this mug wasn't clear glass, it was opaque, so you couldn't see through the mug. And if you ever poured a bottle of beer, you know that how you pour it depends on how much foam is going to be on top of that beer. And if you can't see through the glass, you have no way of looking down there how much is foam and how much is actual beer. That's very much like a stock. So the actual business that we talked about is the actual beer. That's the real thing, the real beverage that you would be interested in. The foam on top of it, in our analogy, is all those traders trying to make a little bit of money, figuring out whether it's going to go up or down or up or down. And some stocks have more foam than other stocks. So some stocks get popular amongst traders. A GameStop is a current example of that, where it's being traded very, very aggressively. There's a lot of foam in that stock. But the point is, there's no way to know how much is foam and how much is actual beer. You can estimate it. But again, long term, you really don't care, because what you're buying is the beer. Let the traders worry about the foam.
Yeah. And I just want to clarify that we're not advocating for drinking in any way. This is more so an example that you could use. And just as you were saying that, I was thinking of actually my trip to Starbucks this morning. And so my wife and I, we get a regular coffee, but we like to put steamed almond milk on top of it. And just like you said, you can't see into the cup. And when you get the beverage, all you see is the foam on top, the foamy milk on top, and you have no idea how much coffee is in there. That's pretty much the same idea here, that all you can see is the nice stuff on top. You don't know what the true depth of the coffee inside of it is. And typically the ratios is what actually makes a good drink or not. Same kind of idea here. So try not to listen to what everyone's talking about, because you will see that stocks are based, yes, on the fundamentals of a company, but also just on what people feel about that company. There's a lot of human emotion that goes into stock trading. If people feel that a stock is going to do really well, it can increase the price. They feel like there's something potentially going to go wrong, it can decrease it. We did see a lot of examples in the stock market in recent times of just stocks shooting up in value just based on the belief that they are going to do something, rather than the fact that they've actually done it already. So we can sometimes see beliefs about stocks built into their price before anything actually happens in real life to verify that. So we're going to try and ignore individual stocks altogether in the simple path to wealth. Tell us a little bit, very, very light, because we don't want to spoil the book. What is an index fund? Because that is one of these most central themes of this book, is investing in a thing called an index fund.
Sure. So think of it this way. If you're going to invest in the stock market, you have a couple of choices. You could invest in individual stocks. You could buy Starbucks as an example, or Tesla. And then you're going to want to pay attention to that stock and monitor it. And you're going to have to determine not only when you buy it, but also when you might want to sell it, how long you want to hang on to it. Now, maybe you don't want to go to that effort, and you would possibly say, well, I'm going to find somebody who's an expert in stocks, and I'm going to have that person pick the portfolio stocks. And you can do that through what's called an actively managed mutual fund. And there are a lot of those around. And there are professional investors who will then pick the stocks, and they will try to outperform the overall market by picking the stocks they think will do better than others. One of the problems with that is picking winning stocks is extraordinarily difficult. In fact, most research indicates that long term, it's actually not possible. The other difficulty is that it's expensive to try, because you have to pay those professionals quite a bit of money. Index investing, on the other hand, which was the brilliant insight of a guy by the name of Jack Bogle, who founded the Vanguard Group. Indexing simply says, I'm not going to try to pick which stocks might do better or worse. I'm going to buy every stock in the index. So there are lots of different indexes. There are indexes for particular sectors of the stock market. You can buy a tech index, for instance. There's the S&P 500 index, which invests in the 500 largest companies in the US. That was the first index fund. And then there's a total stock market index fund, which invests in virtually every publicly traded company in the United States. And that's called VTSAX, and that's the one I prefer and the one that I reference. Now, once you own that, you don't have to worry which stocks are going to outperform, because it's self-cleansing. one of the key things to understand is that if a stock drops, the most you can lose is 100% on that stock. That sounds awful, and it's not fun. Yeah, that's absolutely, that's not fun. Good news is it will fall off the index before it gets to zero. But the more important news is while that can happen to any given stock, there's literally no limit to the upside of a stock. So in the index, you'll have some stocks that are going to do poorly and they'll fall down and they'll drift off the index, but you'll have others that will do spectacularly well. So in that sense, it's a rigged game in your favor long term. The losers tend to fade away and the winners tend to gain. The other thing is an index like VTSAX is cap weighted. That means the most successful companies at any given moment are at the top of the index, and percentage wise, the index owns more of those.
And just to clarify, like cap weighted, what we're talking about is the market cap of a company, which is if you take every share that has been issued by that company and how much that share is worth, multiply those, that tells you how much the company is currently valued at. So by you saying cap weighted, you're saying that, all right, the companies that are worth more, so our Apples, our Amazons, our Microsofts, they're going to be purchased at a higher rate, or we're going to own more of that in our index fund than we would. I'm going to not even pretend to make up the name of a small cap company that I can think of. But yeah.
That's a great explanation, and thanks for checking me on using jargon and explaining it. That's exactly right. And right now, the index, the BTSAX, is heavily weighted at the top with technology companies because that's the sector of the economy that's doing the best. And obviously, as an investor, that's a nice place to be. But the good news, again, part of the self-cleansing that I referred to, is that technology might not always be the top sector. It was not always the top sector in the past. In the past, it was energy stocks were at the top sector and they dominated. And as an investor, you benefit. And financials at one point were dominating. And then for whatever reason, they drifted down, usually as some other sector begins to outperform. So right now it's technology. And right now, owning VTSAX, I get to own a larger percentage of the best performing sector. As that begins to fade, if and when it does, for whatever reason, it'll be replaced by the next up and coming sector.
Yeah, and that's like the phenomenal power of something like a total stock market index fund. And VTSAX is one of these index funds that comes from the group called Vanguard. There are lots of different companies that you can invest in, such as Fidelity, Schwab, T. Rowe Price. Like they all have their own version of a total stock market index fund. So whichever company you end up deciding it was right for you, you should be able to find a total stock market index fund in those companies, and you can still apply all the principles that come in the simple path to wealth. All right, so before you guys launch onto your journey going through these checkpoints, just some tips that you want to think about as you go through something like a book study. The book study, the checkpoints are broken up into about 30 pages. So you have 9 checkpoints, about 30 pages each, and each one has questions that go with it. When you're doing something like this, my recommendation to you would be scan through the questions first. See, okay, what am I expecting to come up in this section? What questions am I looking for answers for? And then read through that section, that part of the book, and write down your answers as you see them. If you come across words that you don't understand or they're used in a way that doesn't make sense to you, stop reading and start Googling, or ask your teacher, ask a friend, ask a parent, ask anybody, and make sure you're getting the full meaning of what you are reading, because that happens all the time. It took me months to get through The Simple Path to Wealth the first time I read it, because I was constantly stopping and Googling, because I was like, this is so interesting. What does this mean? What does this mean? What does this mean? It was one of the first books I read when I started thinking about finances, and there was just so much to learn in there. Those of you reading this book, you're probably actually in a better spot than I was, because you're doing this as part of a personal finance class, most likely. So you probably have a lot more background information than I did starting out. Is there any tips you would have for someone going through your book to get the most out of it?
I think you just outlined a great one. And if you're taking a course in it, you have access to your teacher, who presumably can help you with anything that's not making sense. And I would also say that like you, Rob, I still to this day, when I read books I'm a great reader. I love reading, and I read in a wide variety of subjects, many of which I'm not familiar with. That's one of the appeals. And I'm forever coming across words and terms and concepts that I don't understand. And it's fun to go through the process that you just described and pulling it together and learning it. So yeah, absolutely. Walk through it and take it slowly. Some people have said to me that they have read through the book in one sitting. They find it an easy and at times humorous, which I tried to make it a little bit humorous. They find it an easy, humorous read, and then they'll go back and reread it a little more slowly to absorb some of the concepts as they're applying the techniques into their own investing life.
You make a great point there that for a lot of you, you may not have started investing yet. You may be reading this before you have any money that is available to be invested. So think about it from the point of view of, I'm going to try and learn as much as possible. The checkpoints are going to be sort of a great guide for me to look back on later and say, okay, what were the main talking points in this book? What do I need to remember to do when I do start investing? So keep those around somewhere, make a copy for yourself. And if you are in the position of being able to pick up this book again in the future, you know what to look for and what parts are going to be most applicable to your life in the future.
That's a great point. There is no better time to start on this path than when you're very young, when you're in high school, because you're starting fresh. You haven't made any mistakes. You don't have any bad investments that you need to unwind and maybe pay a tax consequence on it. You haven't created a lifestyle that you struggle to support paycheck to paycheck. You haven't made any of those mistakes. So I frequently hear from people who are older, in their 30s or 40s, who have investments they've made over time that aren't working and they need to unwind them and have created a lifestyle that keeps them from freeing up money that they can invest. So the best ideal time to start is to start early and get on the path correctly from the beginning and ride the wave for the decades.
I'm pretty sure I started my first Roth IRA whilst reading The Simple Path to Wealth. I came across one part of it where like, okay, pause, put the book down, and let's just get this thing started. And if that moment comes to you during this, make sure you are checking in with your teacher, checking in on some other sources, make sure you set up the right account, the right type of account, you're putting your money in the right types of investments. The book will guide you through a lot of that, but just also do your own background research as well and get started. Because as we just said, the longer you are in the stock market, the sooner you invest, the less money you have to put in order to achieve a ton of wealth. And the sooner you can achieve it if you do want to really go for it in your early 20s. All right, it's time to start your book study, guys. Get out there, get started, and we'll see you at the end of the book study.